Hey guys, just making a short video to explain what really is M2. I mean, most of you know that I've gone through the course in here, that is in the members area, and Mark has made plenty of videos explaining breakout strategies and so on. But I was just trying to put together a few things that, across the number of years, I've been trading about 4 years, all the kind of questions I've received from members, how to trade it technically, and then also what do I do when there is a news event coming out, and how do I use the strategy. So I bought the Euro USD chart in here just to show you a really good example. So you can see here technically it is in a triangle. We've had the breakout, and also it's slightly broken above all the EMAs. Now, as you know, when price is between the EMAs, we tend not to look at the pair and we try to avoid it until it has a clear direction, whether it's going up or whether it's going down. Now over here the euro seems like it's gonna break higher because the dollar index is also heading down as they are oppositely correlated. So this is the weekly chart. As you can see, this has broken high above the monthly 55 here. So we will basically be looking for longs on the euro USD. And now how would I trade this? So I would go on the daily time frame, which is where we mostly get our entries because of stop loss and etc. And we can see that our ideal entry is going to be around 110, 150, a pullback near this monthly 55, and I would probably put my stop loss just below this monthly 200 and the trend line, which is around 60 odd pips, but then the potential is 1 to 2, 120 pips, and then maybe even around 250 pips if it gets to 112 500 area. So that's what I would do. Now of course we got to look at other things like news and so on. But before I get to that, what's the A grade area? When we talk about A grade areas, we are referring to where all the EMAs are, and a very strong support or resistance area. So if the A grade area over here we can see is around 108, 200-ish area. So we can also put a fib in there. We would start off fibbing it in here, and then we got the breakout. We could have taken the trade there, which went up around 100 pips on there. So on the pullback, you would have taken it in here. Why? Because we have multiple EMAs, 50% fib, and so on. So multiple reasons would put your stop loss just below here, and then around 50-60 odd pips to make around 120. So that was a 1 to 2 risk reward that was already played out. So we would then move our fibs to the new area, and then we would move the fib in here. So now we have 78.6 fib, this weekly 55, and then also a daily 200 moving average. So we have multiple reasons. We have a strong support area over here, as we can see in the past, and we can look to take it to the upside again if we get the drop again on the euro in here. But now, since it's already broken this area, we would be focusing to long in here. So that would be the 60 pip stop to basically take it back to the upside. Now we have news. So how do I trade news? I use the daily indicator in here. This is very handy. It's underestimated, but I'll show you in a minute how I use it, which works really well when we are trading around news. I don't trade it directly, but I do trade the news indirectly, which I'll show you in a minute what I mean by that. But if you look at the news chart, we have the Euro news coming out on basically Thursday. So this is going to be very volatile because it's manufacturing figures, and especially Germany figures are quite important because it's the powerhouse in Europe. They produce a lot, the cars and etc. And French is mostly about like medical stuff, pharmaceuticals, and a lot of other things. But a lot of attention is paid to the Germany figures. And so if the news comes out worse than expected, which would be the ideal scenario in this example here, what I would do is I wouldn't take it down in here 110 and 170, because what I look at is the daily range is in the past 30 days. And if you look at this here, let's say the price was here on Thursday, and this is only around 30 odd pips, but this is around 70 odd pips. So what I would do is I would put, if this price stays here, I would put an order in here, because by the time it gets here, that's already more than the daily range. It would have done 20 pips more than the daily range, which is around 50, and you would be expecting the price to struggle in here because it's already done the range. There's also multiple reasons there, a break of the trend line there, and this weekly 200 in there. So then you could put your stop loss around 30 odd pips in here, and then basically you look to take it back to the upside because it is in an uptrend. If that does not happen, and if we get much worse results and we get a deeper pullback, then you would be looking basically down here at 108,500. So you got to pay attention to also round numbers, because forex pairs, some of the forex pairs like the yen and stuff, they do tend to react around the round numbers. So if you look at the yen pairs, you will see that happening quite often, but it also happens on the other pairs, on the majors. But if it does pull back a lot further, around 108,500, that would be about 180 pips, which would be about almost 4 times the daily range. So if it's going to stop anywhere, you're basically looking down in here with a 40 pip stop, and then basically look to take it back up. Now another example I want to show you is the CAD. We have the CAD CPI, which is coming out tomorrow. So how will I trade this? If you look at the chart, dollar CAD, basically we are in an uptrend, and we broke this trend line there, which we can take it out now because price is inside it again. But this trend line is still valid. We have multiple touches in here, and this one here, the A grade area for me is in here, 136, round number, psychological level. You can see that previous support and resistance going on. You have a trend line, you have a 200 moving average, you have also the weekly 55 in there. So there's a lot going on, and price is more likely to react in here. Now what I'm going to focus on is where is the price tomorrow, or ideally where does it stop today, because that's very crucial. We look at the daily range, which is similar to the Euro USD 50 odd pips. So let's say it stops here today, and tomorrow the news comes out better than expected for the CAD, which over here would be higher CPI. Then the ideal scenario is the CAD would get stronger, which would mean the dollar getting weaker against the CAD. And what I'm going to focus on is, can it be around more than daily range? So you can see here it's around 60 odd pips, which is more than the daily range, around 10 pips more. So I have my entry in there, and that's where I'll be looking to long and probably expect it to stop in there. So this is a 50 pip stop, and I'm basically looking to make around 100 pips there. So first target, take some partial profits. Why? Because there is a 55 moving average in there, so price is likely to react in there. And you can see in here there was a little breakout on the 55, pull back in there, and it's gone down further. So I would be looking to long in here, and then basically look to take it up to the 138 level, which is around here where price has stopped before. So that's where I would most likely close my trade, and then we can look to take it again if there is another setup, if it breaks higher, but that's for later. But that's how I would summarize basically M2. That's what we look at. We look at multiple reasons. So like the pound CC, for example, if we were looking for the pullback, you wouldn't trade it anywhere in here because you don't have multiple reasons. Yes, there is a support level here, but that's the only thing you have. And you can look at here, example, if you took the short here, you would have had a loss because it just went straight through it. There was only one reason, which is the 50%, and well, the other reason is the support and resistance going on in there. But ideally, when you have multiple EMAs, that makes it a much stronger trade. Like you can see here, that is 78% fib, weekly 55, 200 moving average, and the 55 moving average on the daily time frame. So we have 1, 2, 3, 4, and also we can add some little resistance in there. So you can see the price is bouncing off in there. So that's going to be 5 reasons, and the more reasons you have, the better the trade uh, is going to be, and there's more likely the price is going to react in there. Um, so yeah, that's basically how I see as M2 and how I would trade, whether using it technically or whether I'm trading around news. But yeah, don't underestimate the average calculator. Pay attention to that, especially around news, or even if the price moves a lot on a certain day for whatever reason. But yeah, that's M2. Let me know what you think, and catch you guys later.